Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to a new trading day, retail trading team. And the day is pretty much over. So let us see what the lovely market gods are offering us looking forward. And we're going to jump right into the routine briefing slideshow right about now. One of these days I will get a little more adept at minimizing my screen there a little more quickly, but until then, please bear with me, and I promise to bring you a little bit extra value just for those wasted few seconds there. So anyways, digressions aside, like I said, the big move I think is pretty much over for the day, so we will see if we do get that continuation. I did not get involved again today, so I did not add to the trade that I have running just because I like those kind of fake breaks lower, so those level recoveries. And you did have that a little earlier this morning of that 4,500 level. Yet I just didn't really get involved. It looked like it was pretty aggressive, and to be honest, I thought that they were going to end up stopping out of the runner, but alas they didn't. We're about to make a new high as we speak, and we're just kind of still taking it level to level. So next level up here is going to be, excuse me, 45.40. Obviously looking for that first fake break of the IB high, and then if we don't get that, then just kind of continue to trail, or I'm continuing to trail that runner. It has, like I said, been one of the best trades of 2023 for me, and I'm going to give it plenty of room. And that's really what this briefing is about. It's less about what's going on intraday. Intraday, we're just kind of balancing, showing a little bit of continuation. But really, I think the focus today needs to be on the major bullish developments as it pertains to not so much today's trading, although obviously there are tradable levels, which you can see there on the screen, but really looking forward, intermediate term, and perhaps even long term. So before we leave this document, I just want to remind you that it is in the description of this video, along with all of my other most important resources, and you can access that there. So one more thing, we are at the edge of the expected move, right about this 45.30 area. So yesterday, I forgot to even note in the newsletter, we had another close beyond 3 sigma. So forgot to put that in the newsletter, but we had that again. I hadn't seen a 3 sigma close since beginning to track it last year, and now we've had 3 in a 1 week period. So pretty crazy. Back to back, I believe it was Wednesday, Thursday, and then again today. So in was that Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday. So 6 trading days. And we'll see what happens today. So 5 trading days. Thank you. Basic arithmetic. 5 trading days, 3 of which were beyond 3 sigma. I need to note that. I'm going to note that on a tweet just to make sure that I don't lose track. So pretty crazy. Again, today, looking at 45.30 is the edge of the expected move if we do want to respect that lovely bell curve today. So that's just kind of getting our bearings here. Again, those levels I do change as the day goes on, but right now, that's what we got going. So bull are obviously most important. Really, that 4,500 area is going to be super important, is in particular as we move through this briefing. You'll see why. So let's first talk about volatility. This is my favorite chart because this was just such a clean trade. It's just really just perfect. You saw the breakout of that triangle, which you can see is that red dash line there. The breakout of that triangle, that was a 2-month pattern, and you saw price follow. We had that big squeeze yesterday to confirm that breakout, and we also made a new low. So 1620 is the old low. We're currently, I think, exploring around that 1570 area, and until we reclaim 1620, which was that old low, I just don't think there's a bear case. And as we move forward here, you'll see why in terms of price action itself. So let's start with the SPY. I think that this chart is the most important. Uh, Again, intermediate term to perhaps even long term, because what we do, we recover that trend line. So you can see it, there's that green trend line that was red until yesterday. Comes from the March low. That is the primary structure. That was the primary structure that we were watching as we had this pullback, and it remains, to me, the most important intermediate term structure here. So we're testing the top of value there. You can see that profile is drawn from the high to the low of this pullback, and we're kind of testing the high area of that right now, that 450 area in the SPY. But really what's going on, so I'm going to go back to the setup here, or the warm-up document. If you look at the setups, what I'm starting to see is setup 5 as it pertains to the SPY, is we're building that time and volume at the edge of balance. So again, looking at here, we're building the time and volume at the edge of balance. We've recovered that trend line, major bullish developments, and as we push through here, if and when we push through here, I think it's a pretty quick trip up to that 456 gap. The market hates leaving gaps in the chart, especially gaps to the upside. So again, I think that once we do confirm the return to imbalance, I'm not sure how long we're going to bounce around. We could definitely bounce around for a few days, pop back in. Yet once we do confirm that break, especially if it is below while we are above that trend line, you'd have to have quite a bit of consolidation to get above balance and also be below the trend line. But assuming that we don't have more than a few days of that consolidation, once we do finally break through that 450 again, I think it's going to be a pretty quick move to 456, and then once we get up there, we'll see what happens. But right now, bulls are in complete control. Very, very bullish developments on the chart. Most important being the recapture of that trend line from the March low. So, and obviously we defeated that head and shoulders that you saw on the ES chart, which is what you're looking at here. So I was expecting honestly a little more consolidation this week, so I'm happy to be on the right side of the trade there. Yet you saw that head and shoulders very quickly wiped out. We'll say it became a failed pattern as of yesterday, really, and definitely confirming today, as we didn't have any strong breakout back below. So that head and shoulders is now off the table. And what usually happens when one pattern disappears, another one forms, and it becomes as powerful as the prior pattern itself. So what's that new pattern that we got going on here? It looks like, to me, this is a 4-hour chart, by the way, it looks like we have a double bottom on our hands. And again, as we continue to as buyers, I should say, continue to absorb those sellers coming in, trying to reoffer and send us lower. I think the longer that we build time and volume here, the more likely we are again to go after that 456 gap in the SPY. And you can see it here represented in ES. It's that magenta dotted line above, right below 4600. I think it's about 45.98. So not only is that going to be that price gap, you can see once we get above, I'd say about 45.50-ish, there's definitely, as I just noted, there's definitely potential for some sustained consolidation. But once we do get that break, and once we do finally accept back into imbalance, you can see the next major distribution is right around that gap. So that's why I think that gap is going to be the magnet going forward, as long as we're above that trend line. Just kind of a matter of time, in my opinion. So the final piece of price action today is just going to be the general, I don't even really know what to call this chart, but we'll call it the balance chart. So what's been happening to balance? Well, on Monday, it was at about 45.20. Yesterday, 45.25. Yesterday, it moved up to about 44.45. And where is it today? As you can see on this chart, somewhere around 4,500. So you can see the POCs of those longer term profiles is still about 44.40, but you can see that value area high on the one to the far right, which is the widest time frame, the value area high moved up to about 4460. On the intermediate term time frame, it moved up right above 4500, about 4505. And then if you're just looking at the profile from yesterday's close, the value area low corresponds to that 4505 area, and the POC is somewhere around where we're hanging out right now. Um, Actually, we're a little bit higher than I thought, so it's about say 40, 45, 15ish. So really, the major takeaway here is that value has once again moved up. I think it's at about 4,500. We'll see. There's definitely some imbalance from yesterday's big move. As you can see, there's just been not a lot of volume. There's not been a retest of that low volume node between 44.80 and 44.90ish. So definitely a potential spot to go explore there. But my opinion right now is the balance itself is about 4,500. So it's a psychologically important number. It's not really any huge surprise there. Just something to watch going forward. And I will start including this chart every day. I've been including it past several days. I think it's really good to watch the behavior of volume and of value and how it moves. So it was really good last week. So just a side note, anybody who was paying attention last week, we saw with that big low volume move higher, value itself did not shift. Value stayed at about that 4505, and then what you see the next day, that huge unwind. So difference between what happened then and what happened here is we've had really good volume. These are not, I shouldn't say really good, but definitely decent volume, especially today. Actually, we've had a high relative volume. So you had good volume yesterday, following through today. You're seeing bounce move up with it, and that's just kind of showing that I dare say this bull move might be for real. So we will see what happens, and I will be back tomorrow a little bit earlier. I had a little bit of a power outage that threw me off earlier. I am in Florida. I didn't get hit by the hurricane at all. Just had like some weird little power thing. So nothing serious, but I'll be back about normal time tomorrow. And until then, I'd appreciate it if you give me a thumbs up on this video. That helps with our friend, the YouTube algorithm. And I also encourage any engagement, be it in the comment section of this video itself, on Twitter, where you can find me at Routine Trader, or just respond to the email. And if you're not a subscriber to those emails, that is going to be available at retailtrading.com. That's where I package everything up very nicely every day, and you can go back and look at past newsletters to see how accurate or not accurate I've been if you really want to check my work there. So if you're not a subscriber, you can go there and you can always respond to any email, and I'm happy to get back to you as soon as I see it. So I thank you for your attention. Have an excellent rest of your trading day. Stay classy until tomorrow.